With that, let's move on and welcome our first guest on the show. We have N. Jayakumar, Managing Director and Group Chief Executive Officer at Prime Securities, joining in. Jakes, good morning. Great to have you on this day. It is a big, big day. And while the market perhaps has, one can argue, factored in a lot of it with the 3% pop yesterday, all-time highs, do you think we are in for something big today, if indeed that number for the NDA goes meaningfully above 300?
Well, good morning. And, far from making predictions this is like making predictions 2 minutes before the event, as it were. So the way I would say is that I have, no way to determine whether everything is factored in. But I think for me, at least, it's not about necessarily, of course, you need to get over this numbers and this hump of the actuals coming in at, the 350 plus minus 10, 15 seats, if you will. I think the real thing is it's a much bigger story. It's a story about the next several years. It's a story about the next at least 1 decade as far as India is concerned, where systematic planning from an individual perspective, from your viewer perspective, has never felt more promising than it feels at this point in time. So the way I would say this is that regardless of the numbers today, unless it goes well outside this range that channels are talking about, I think we are largely done. There will be intraday spikes galore, 100 point up, 100 point down kind of moves that might happen. But I think the market is largely gearing up to buy on dips. And I think that's going to be the story for the next several years. And the underlying theme again is that the Indian markets, all going well today, will remain overvalued optically and will remain expensive for some time.
Yeah. Well, we can live with that, right? Jakes, hi, morning. Prashant here. Now, so just since we're talking on the results day morning, let me just humor me for sort of a couple of minutes with just today. What is the number? So upside is pretty clear. If the number and, exit polls in the last 2 times underestimated the margin for the winner. So so upside is clear. But on the downside, what is the way to think about it? Do you think if the BJP itself ends up with around 300, market should be okay, even though, exit polls put them at about 325, 330. But do you think around 300, it should be okay?
Yeah, I would say so.
Okay. Yeah. But, essentially the majority on their own is what matters, and some margin beyond that, right?
Logically, yes. Yeah. But I don't think we should convert this to a science. I just think it's a feel-good associated with these numbers coming through. So there was a time 48 to 72 hours ago, maybe a little more, 96 hours ago, where we said if 280 plus comes along, continuity is assured, we move on in life.
Yeah.
We are moving that bar to say 280 go to 300, 310. I think it's not a science. I just think it's a feel-good, and to the extent there is comfort with a little buffer, so much the better.
Hi, Jakes. Good morning and good to see you. And Jakes, couple of themes that you've been spot on. One is PSUs and the other is the metal space. Let's talk about the PSUs first, because yesterday, post the exit poll itself, we had these stocks that are rallying big time. How do you approach them? The theme as a whole has done very, very well. And I think banks in particular is something that you've liked as well. But what's still looking attractive from these levels?
So I think I've always maintained that the underlying theme of PSUs is that they can get orders, especially on the manufacturing side, on a nominated basis. And that's what leads, since the government itself was keen to galvanize capex and galvanize investment by the listed space or the companies themselves, the private sector, the way they did it was actually lead through the public sector. And most of the capex here came through nominated orders. They don't have to bid for them. So notwithstanding the traditional sort of inefficiency of the PSU, if you will, the tag that has been there for the last so many decades, the PSUs this time have been replete with orders. They've been sort of, overwhelmed with orders, and they're able to therefore execute. Classic case, whether it's railways, whether it's defense, whether it is, the metal space in terms of expansions, etc. So the way I see this is that with the passage of time, with the passage of technology adoption, with the passage of technology transfer, PSUs with inherent capacities have become more and more efficient, and they're getting orders. So a combination of high capacity utilization, orders coming through and efficiencies kicking in, I think it made for tremendous tailwinds as far as the PSUs were concerned. It was true in the banking sector where the RBI took the mantle of actually creating norms that cleaned out legacy issues that made banks recognize their problems of the past and recapitalize them whenever required. So given that kind of a scenario, banks have now moved to 1.3, 1.5 times book in some cases, even more expensive than some of the smaller private sector banks. And as far as the other manufacturing, Make in India theme, etc., from defense and other standpoints, you've had actually the sort of a Goldilocks scenario and a golden period where a lot of things just kicked in as far as the PSUs are concerned. Valuations today are not expensive. Organic growth will keep them going. But I think the bigger play there might well be the division, if you will. Many of these companies have historic land banks, historically held land banks. They have mining rights in the case of metals and mineral companies. They have manufacturing capacities. And the demergers in some of these corporate actions could well unlock more value as you go along.
All right, Jake, so you've given us for the PSU, you've answered the PSU question. By the way, just telling our viewers that we're getting initial leads that are flashing for our viewers as well on the screen, so keep an eye out on that. Jake, the other one that you briefly mentioned was the metal space. And I know a couple of stocks in there, you had a bit of a contra trade when the street was not really looking at it. JSPL and Vedanta, both of them have done very, very well. Talking about demerger, Vedanta could unlock some value as well. Are you still positive on these two?
Very much. I think the theme in both these has been a combination of capacity increase, some deleveraging, governance issues dramatically improving, and in some cases, like in Vedanta, could be demerger. I mean, the obvious disclosure and disclaimer is that I either have held these stocks or currently holding these stocks. So my interest should be put out as a disclaimer. Having said that, I think the theme is different, which is that the dollar index in the backdrop is weakening, number one. And we have a wonderful period where actually even commodity prices, while certain commodities are moving up. This scenario existed several years ago. But the reason it didn't play out was China became the party pooper because their economy collapsed. So at that point in time, when the transition to EV was happening, transition to clean energy was happening, many of these commodity moves could have happened even 2 years earlier. But for, as I said, China playing the party pooper. Today, China's economy seems to have put a floor, seems to have established a base. And to my mind, a weakening dollar, and in that the commodity prices, you have oil not actually moving up, which is great for India. But some of the base metals have been actually helped a lot by things like supply disruptions, issues in various parts of the globe regarding mining closures, ports being shut down, movements being affected, floods, etc. So given all that and capacities now being triggered into action, because countries like India are pulling in their weight, I think we could have a really golden period in the next 2-3 years for commodities. And who better than the names that you mentioned, because they actually have mining rights, they are some of the base metals, and they're kind of world level capacities in most of the cases. So long answer to a short question.
Jakes is with us, but let me also welcome in Arvind Sanger, who is joining in with what he's making of the big day. Arvind, we spoke with you yesterday. Welcome back. Good morning again. So it started, the numbers, the tally is coming through thick and fast. Your thoughts? We had a big day yesterday, 3.5% for the Nifty. What is your sense? Today, of course, will be what it will be. But do you think the base shifts higher, and we're if the exit poll results hold, markets looking good for longer?
Well, yesterday seemed to be more of a short covering rally. That's why you saw the large caps largely lead the way. I think that as we get more comfortable about policy continuity and in general, the economic outlook starts to dominate again. I think, let's be honest, at the end of the day, elections are primarily important to the extent that we worry about policy. But at the end of the day, the Indian economy is more about what's going on at the fundamental level. And I think the government has been very good, this current government, in terms of infrastructure and manufacturing support. And if we have continuity on that, then we can go back to focusing on which parts of the economy are going to do well. And I think, Jakes was talking earlier about metals. That's clearly one of the areas we like, as I said yesterday. I also think the natural gas economy. So I think there's a lot of things that the government has talked about in the past, but also a lot of stuff, is the consumer going to come back? The domestic consumer. So these are some of the sectors where it wasn't necessarily a big day yesterday, but those are important things to keep in mind, not just for today, but is the domestic consumption story going to come back? So these are some of the things that I think are going to be important in the coming weeks, months, and couple of years.
Absolutely, Arvind. That's the question on a lot of people's mind, whether you should be increasing allocation out of sectors that have not performed, and definitely consumer and staples is one such pocket of the market. Jakes, before we let you go, you made that point in your opening remarks about how this is a market that is looking to buy the dip. The problem, however, for this market is that the dip is simply not coming, and they're usually very, very shallow, 2-3% at the best. And, we've not seen any serious, substantial profit taking from domestic institutions either. So, I mean, do you think, would you still have expectations of that dip? And if yes, then how would you approach the same space that you like already? I mean, within PSUs, what would you go in for first? Or would you look at any contrarian bets like consumer, like what Arvind was just alluding to?
The way I think it's more an expression to say that the market's looking that if there is a weakness at any point in time, you need to be committed. I mean, you're talking about first-time investors. 3 years ago, and over a period of time, percentage of retail savings that have moved into the market's now gone up to close to 5%. But it's still an evolving theme. The month-on-month SIP numbers, etc. So I think the point here is that with this kind of flow into the markets from retail investors, you will literally be, seeing a sort of a gradual secular trend of more and more commitment of retail individual money in markets. So from that point of view, multiple themes, I would say themes which involve manufacturing, we talked about. So defense stocks for the moment are still reasonable. I mean, I gave an example of the biggest in the picture, like an HAL, which still is trading at about 25 times if you annualize the last quarter numbers. So this is not, completely off the charts kind of valuations. Yet you need to be selective. As I said, the PSU space is expensive, make no mistake. But having said that, there are still a number of gems you can pick up, but you have to take a much longer view. Instant gratification, that's not going to be the theme forward. And in the private sector, there are enough and more people who are willing to step up to the plate, increase capacities. We've talked about the, one space, which is the metal space, but like that, you could go down individual, those that feed into the defense sector, chemical companies, NBFCs, which are fostering growth in the MSME space. So there are spaces that you need to do, but you need to go back to the drawing board and get bottoms up. This is not a market where you can throw darts and assume that everything will work.
Oh, yeah.
So the easy money days are over.
Yeah.
But the secular trend of the markets, I think, is intact. In fact, has been reaffirmed by these numbers, which, as we speak, is about 68 to 70% of the early leads are going through in favor of the NDA.
Yeah.
And if you extrapolate that to 542, that's about 350 to 370 if my maths helps me.
Yeah.
So I think we're still on track for what was laid out in the
expected outcome. Yeah, I mean, going by this, but it's still early, so let's not second guess. Jakes, it's been a pleasure having you on this morning. Thank you very much, and we'll keep in close contact as the day rolls out and the market gets through the next couple of sessions as well.